Thank you for tuning in to another edition of the Vulcan Report. In the future, Lord willing, I would like to also cover other topics that most people aren't covering in the mainstream media. And rather than making multiple YouTube channels, I'm just going to do everything under the one channel. And what I'll do is I'll just make playlists. So if something doesn't interest you, you just know not to check out that playlist. But I'll make everything topical so that if you're not into certain topics, you don't have to watch the videos. All right, on to the Vulcan Report. This is the Vulcan Report for Monday, April the 30th. The chart you're looking at now is a chart of Apple Computer. Since Apple now is a major component of the NASDAQ 100, I have renamed the NASDAQ 100 the Apple DAC. Okay, so looking at this crazy looking chart of Apple, you don't need to know what all the colorations and stuff is for. It's for my purposes. I will point out everything that you need to know going forward. The first thing you're going to want to take note of, for those of you who are new to my videos, down here at the bottom right hand corner is you'll see either a bull or a bear or a question mark. If you see a question mark, it means that there is no trend. The market is neutral. Okay. If you see a bear, obviously it's in a bear market. If you see a bull, obviously it's in a bull market. Also here at the bottom it tells you neutral, red for bearish, and green for bullish. Okay, so that's all that is. I'm going to expand this so that we can get more of the chart up top here, because the stuff at the bottom is really irrelevant. All right, as you can see here, we had a nice gap from April the 24th to April the 25th. Huge upsurge. Okay, well, that gap has not been filled yet, but as you can see, we have positive momentum here, hence the blue bars. Blue candles are positive momentum. Red candles are negative momentum. It's just that simple. Okay, so we have positive momentum, but price has been coming down. Okay, usually when you have a divergence in price, when you see price heading down, but we're getting a positive momentum reading, 9 times out of 10, it's going to lead to negative momentum. And so I expect the next bar for Monday to be a red bar, which will be the beginning of a downtrend. All right, downward momentum. As you can see here, we are not pulse waving. We're trading inside the black lines here. Here's the top line, here's the bottom line. Also here at the top reading we have, this is actually a dark green line here, so you can see we started this positive momentum here. When it was red, you see we had the negative momentum going down. Okay, when you see these light blue little miniature time bombs, what that means is the price action. When you go into the market depth, and when you look at the different algorithms that are battling on your intraday tick charts and 1 minute charts and stuff, it means that the market can break either way, up or down, even if it's in an up or down trend. Okay. Now, overall, if you want to look at the market from a weekly perspective, you see that we're trading above the Kumo cloud. This is the Kumo cloud right here. We're well above the Kumo cloud, so on the weekly, we are bullish. Okay. On the daily, we're also bullish. All right. So we're still bullish. We're still overall bullish as we're above the Kumo cloud. All right. But the markets do ebb and flow and go up and down, even within longer-term trend perspectives. Also, this purple line here represents the long-term trend line support if the prices are above it, or long-term trend line resistance if price is below it. As you can see, we're well above it, and this price here is at $477.25, and we're above 600. So we're okay for now in this particular market. The other thing you're going to want to note too is here in pre-market, we are trading down slightly. We had a close of $603 even on Friday, and right now we're around 602 to 602.99 on the bid ask. So not a whole lot of action there. The futures are just down slightly. The Dow is off 7. The the Apple DAC is off 5 points, and the S&P is off 2, and the Russell is off 1.3, 1 and 3 ticks, you can say. So not a lot. A little quiet right now. The euro is down 42 pips, and I'm looking at the FX futures. So with the negative euro, you can expect a negative equity market today. All right, so what I expect going into Tuesday, from Monday to Tuesday, you see we got these 3 time bombs in a row. So we could break either way on this one here. Basically, what you're going to want to look is for breaks of support or resistance. You're going to want to short this at $600.21, a break below that, or buy a break above 606.46. It's just that simple. All right, so that's the Apple DAC. Let's move on to another one here. Okay, looking here now, this is a chart of the euro, the Forex. Okay, you can see here that the market attempted to pulse wave here last week on Thursday. And then come Friday, we really didn't get any follow through there. We did not get a strong close, so it's still neutral. The euro, we got the time bomb. We've had time bomb now going back here for like 2 weeks. You can see pretty much every day. We've had some nice positive momentum blue bars, so you can see the market was just trending higher, slowly but surely, chopping around, moving sideways to slightly higher. Tried to pulse wave here, really didn't get the follow through needed on Friday, even on Friday we took out Thursday's high, but still overall we're getting a red bar here, so we could be looking at the beginning of a downtrend here as we trend lower, possibly breaking below the Kumo cloud and getting into a negative pulse wave scenario, which would take us back down below 129. So for Monday's trading, you're going to want to sell a break below 130, 151, or buy a break above 132.75, somewhere 132.76, something like that. Just to give you the heads up, in the overnight market, we did not break that. We did not get anywhere near that, as a matter of fact. So just something to think about. Market's going to try to decide and choose a direction here going forward. Okay, the next chart is a chart of the natural gas futures. As you can see, we've been in a powerful downtrend. Been well sustained for quite a while, as you can see as I'm going back here. Look at that. Powerful downtrend. We've just remained below the Kumo. Even when we bumped above, when we tried to break and hit the bottom of the Kumo, we only got smacked right back down again. So very powerful downtrend. Okay, something to consider and think about going forward in the natural gas. Everyone's been trying to call tops and bottoms in the natural gas. Okay, what I suggest is that you really take an honest look at what's happening here. You see, we go sideways, then we negative pulse wave for a bit, and then we get back into the consolidation zone. As you see, we're neutral in the trend. All right, we got positive momentum. We started the positive momentum for this last phase on April the 16th, but we still trended down. So we had a negative divergence there, price diverging from momentum. Then momentum finally broke, and we broke out here. So we're going to try to get up to 240. And as you can see, we smacked back down again. I'm thinking that this is just setting up for the next leg down, and we're going to crash back below $190 here. That would be really severe. I don't think we've necessarily seen the bottom yet. I think we're going to start a basing bottom out process, perhaps, maybe, because you see this last down leg was kind of elongated. We really didn't get a lot of downward pressure, just kind of like stretched out. That's usually the beginning of some kind of bottoming process. But Monday, you have to look at the time bomb. We've had time bomb now for pretty much every day since we've been in this positive momentum phase here. We're not pulse waving. We're not negative pulse waving. Therefore, I will look to stick with the time bomb. Time bomb says sell this puppy at a break below 210 and ride the positive breakout momentum at a break above 220. It's just that simple. Okay, video is getting a little long, so I'll try to close this up. All right, this is a chart of the silver. Silver is trying to start a positive momentum phase up toward pulse wave, but we gotta go with what the time bomb says here. Time bomb says sell a break below 30.90 and buy positive momentum above 31.49. Because what you're going to try to do is get pulse wave. We'll start pulse waving if we break 32.04. We'll negative pulse wave if we break below 29.84. A break below 29.84 could send us below 26 bucks easily. So be on guard for that. It's also kind of crossroad. As you can see, your long-term trend line resistance is at 37.67 and starting to turn down. Also, the top and bottom cumulo clouds are coming together, so that could signal a run up to test 33.50 and even beyond again. So we have to keep our eyes on the gold and the silver. All right, but the trend is neutral. Okay, so we're not going anywhere at this point. Okay, this will be our final chart. This is gold. As you can see, gold is in a bullish stance, and we have positive momentum, and it actually pulsed wave on Friday. So now going forward, we're going to look to buy a break above 1669.70. 1669.70 would be the buy-in on the gold, looking to go long gold. We also have a green arrow buy signal for the gold. So this is an official buy signal on the gold as it's kind of decoupling from the silver. Our initial target is going to be the bottom of the cumulo cloud on this one. So we're going to look to probably get to about 1710. We'll call it 1710. And the reason why I say that is because 1690.90 is the bottom of the cumulo cloud, but because they're so close together, we should touch the top of the cloud, if not break above it, which is at 1710. So I'm going to look to ride this up to at least 1710. And you can see this is the beginning of a bull move, or an attempted bull move. The last one we had here back on April the 12th failed. Okay, you can see it failed, and then we crashed. So this is another attempt. All right, 2 bars in, we dropped. This is the second. You see 2 bars in. So if we drop Monday, then that'll be another failed top, and we'll look to probably move. You figure from here we went from 47. You're looking at least a good $30 drop from here. Okay, maybe even more if we break below here and negative pulse wave. That'll take us into the 1590 handle. All right. So buy the break if we get it. If we don't get it, chances are by Monday's close we'll set up for Tuesday's trade. We'll probably get a time bomb here, and we'll have to look and see. But until we get a time bomb, our direction for this one is up, and that's what we're looking to do right now. So we'll have to look and see what happens. So anyway, remember, take what you can and give nothing back.